Right, trend lines. Trend lines are straight lines that connect two or more price points on a chart to identify and confirm trends. Trend lines are a fundamental tool that can be used to identify and anticipate the general pattern of price movements in the market. Essentially, they represent a visual depiction of support and resistance level in any time frame. The importance of trend lines in trading lies in their ability to provide a clear visual representation of market trends and potential reversal points, which can help traders make informed trading decisions. They provide a simple yet effective means to identify and anticipate market behavior. Today, we are simply going to look at how to draw them. So let's bring up a random chart which hasn't got any trend lines on it. So let's do Dogecoin just for a laugh. Right, Doge. Okay, Dogecoin, here we go. So this chart has not been, oh my God, this chart I haven't set up yet. So let's have a look. So this is Dogecoin 6-hour chart. Now, before you can trade, before you can do anything in the crypto market, you need to learn how to chart. We can start to identify a trend line by looking at where the price action seems to consistently sit. So it looks like potentially this is a trend line here. So you can see here, price action is bouncing off this line, acting as support, and then it flips to resistance. So there's a trend line. You want to get as many touches as possible, and that's how you kind of determine where the trend line should be. So we've got a touch there, that looks about right. So there's one trend line, definitely one here. You can see a touches there and touches there. And we've definitely got a trend line there and trend line here. We can put a trend line there. Right, so these are horizontal trend lines, and they are representative, of course, of where the price action has consistently visited, and buyers and sellers will use these lines as a place of where potentially to sell or buy. As an example, the price action came up here. We know historically that this trend line has acted as resistance. You could potentially sell there. That's how you would incorporate it into your trading strategy. But there are more than just horizontal lines. There are also curves, diagonal lines, all of which act as trend lines. So those are a few horizontal lines. Now let's have a look if we can see any diagonal lines. There we go. We've got a touch here and a touch there. This is a rising wedge which has a 70% chance of breaking to the downside, and as you can see, it did. So how would I trade this? Well, I know this trend line here is acting as resistance to the price action. Prices come up, bounced off. Prices come up, bounced off. Price broke through, but then broke back down. Hasn't yet managed to act as support. Acting as resistance, acting as resistance. So what I will be looking for is two trend lines which converge. Because what that means is there's a set of sellers here, and there's a set of sellers here. Why settle for one set of sellers when you can have two? So if I was to short this, I would realize that this is a point of confluence in the price action, and this is a potential place to sell. I know this trend line is acting as resistance. I know probability wise this rising wedge is going to break down, and therefore this trend line is acting as resistance too. See, the price action bounces off it here. This would be a great opportunity to short Dogecoin. So if I had shorted Dogecoin here, we would have had a quick 6% in spot. That's how you use trend lines to trade. Now, trend lines will also give you an idea of where the price action will stop. So we had this potential trade here, and the price action broke down. How do we know where it's going to stop? We know where the next set of buyers are, and we know that this trend line is acting as support. The price action comes down and it bounces off. The price action comes down and it bounces off. It's done that consistently. If I'm entering a short trade here, I'm probably going to take profits here because that's where I know the buyers are. And the chances of this support line flipping to resistance, well, it hasn't happened yet. We've also got this trend line I've just drawn, which has also a set of buyers. And as you can see, it was respected by the price action here. This point, which is a confluence on the opposite side of the trade, has a support line here with lots of buyers and a support line here with lots of buyers. Two lots of sellers here, two lots of buyers. That's where I'm short, that's where I'll take profits. It's that simple. That's how you use trend lines to trade. You should be practicing with your own charts, figuring out how best to chart these. You can chart things many different ways. As an example, this potentially is actually a broadening wedge as opposed to two parallel lines. Same principle, same probabilities, but nonetheless, it's important to get everything correct so you can properly assess where the price action is going to go. That's Dogecoin. That's how you draw basic trend lines. The most important concept to get your head around regarding trend lines is understanding how they provide support and resistance to the price action of any given coin or token, and then the process of them switching between acting as support to acting as resistance, or vice versa. A process which is called the SR flip, or support and resistance flip. So let's take a quick look at that before we finish. Support is where demand is high enough at the trend line that the price will not break below it. Resistance is where sellers have taken control of the trend line and the price can no longer break above it. When this occurs, it's called a support and resistance flip, an SR flip. Let's see what this looks like with real price action. Watch as the price action breaks down and then support turns into resistance. The price action then breaks back up and resistance becomes support again. When trading, you could short the flip to resistance or long the flip back to support. This is what's called an SR flip, a support and resistance flip. That's it for now. This has been a brief look at trend lines and how they can act as support and resistance to the price action of any given coin or token, and how identifying SR flips can help you determine the potential direction of the price action, as a breakout of a resistance level is considered a bullish signal, whereas a breakdown of support is considered bearish. Catch you in the next one.